Hi everyone, welcome back to another episode of Chalk Talk. If you haven't been here before, welcome.
Welcome.
Thank you for clicking. Please like, share, and subscribe. That was really fast, just kidding. But today's episode, to get right into it, not waste any people's time for clicking, to get right into it, today's episode is about
Bristol-Myers Squibb.
Bristol-Myers Squibb.
Bristol-Myers Squibb.
Ticker symbol BMY. And we haven't had a Bristol-Myers Squibb episode since September 20th, and today's recording is Halloween. Happy Halloween.
Happy Halloween. I don't have a costume. I don't have a costume for this episode. It's all right.
Space Jam.
This is not a costume. This is
red glasses. You're playing a 90s kid.
I am a 90s kid.
Yeah. A 90s kid in a 2023 world. But anywho, back to Bristol-Myers Squibb. Today's episode is a quick go over the numbers, a little bit talking about some new news, not too much news with Bristol-Myers Squibb, and then we're gonna go over a little bit of their earnings. They had an earnings report come out last week, like the majority of the market has released theirs over the last week. But
Indeed. So let me just jump right into it. Are you ready for that?
Ready? I am.
Ready to rumble. Bristol-Myers Squibb. So what I have first is Bristol-Myers Squibb. Bristol-Myers earnings, lower outlook for new products, and margin leads to fair value cut. Bristol-Myers has made an assessment and come out and said, we are lowering our Bristol-Myers Squibb fair value estimate to $63 per share from $66 to reflect more pessimistic outlook following third quarter results. Management lowered expectations for new product launches, increased spending through 2025 caused most of the valuation decline. And so also it goes on to say recently launched drugs are posting mixed results and are the primary reason for our lower valuation. And then they go on to say, we believe Bristol needs to spend more on marketing to propel lackluster sale trajectories of several new drug launches. While the outlook has deteriorated, we believe that there is a strong efficacy of the newly launched drugs combined with increased marketing will support several new blockbusters, a key factor for the firm's wide moat. So Bristol-Myers has honestly come out honestly and said that, hey, we're not doing too great. But I don't think a $3 drop is that serious.
No, I mean, honestly, they're not. Obviously, I looked at their numbers before we started this video. They're not horrible.
No.
I just don't think they're bringing in as much money as analysts and investors and, well, even themselves would like to. Like we talked about in their last episode, they have a lot of competition with generic drugs, and that's one of their main concerns. Their big I believe it's called Revlimid. It is a prescription medicine that treats adults with multiple myeloma, and that is one of their main drugs, which is pulling down their overall income because it's not doing so well.
They're gonna
comparatively.
And they also project pouring more money into advertising to make up for the loss, which is going to add to the loss, so the way you look at it. But I also have here that Bristol-Myers Squibb insiders sell $25 million of stock, possibly signaling caution. I mean, so they already came out and said that. That was the first one was on the 30th, and this one's on the 31st. The chairman of the board and CEO, Giovanni Caforio, made the biggest insider sale in the last 12 months. That single transaction was for $18 million worth of shares at a price of $74.65 each. And then in the last year, Bristol-Myers Squibb's insiders didn't buy any stock. Over the last 3 months, we've seen, this is according to Simply Wall Street, over the last 3 months, we've seen significant insider selling at Bristol-Myers Squibb. In total, insiders sold $1.1 million worth of shares in that time. and we didn't record any purchases whatsoever. This may suggest that some insiders thinks that the shares are not cheap. So they're saying that Bristol-Myers is overall doing well if they don't think it's cheap. So they're like, let me sell some while I have the chance. You know.
Well, I also think that sale was made because the CEO, as you just mentioned, he actually recently just stepped down. He was the CEO since I think 2015.
Oh, well, that's actually my next article, if you would like me
Yeah,
to continue. But Bristol-Myers Squibb appoints Christopher Boerner. Boerner, I
yeah,
apologize, PhD to the chair of the board of directors, effective April 1st, 2024.
yeah, and he is their CFO, who I think I don't know if if he's going to be both acting CFO and CEO. He was their current CFO, who will be their
Yep.
new CEO.
Boerner was
Next.
named executive vice president, chief operating officer, and CEO elect on April 26th. And as of November 1st, Boerner will be chief executive officer of Bristol-Myers Squibb. So, yep.
Yeah. And then their last CEO, he was with the company overall for 23 years, and then CEO for 8.
Yep, 23 years. Yep. So,
Yeah.
hey, that's a good amount of time dedicated to a company.
Yeah, 23 years with one company. I mean, Bristol-Myers Squibb's been around for more than 130 years, I think, 140, 50 years. So they've been around the block a couple times. But yeah, since our last episode, the stock has come down a bit. I believe our last episode at the end of September, it was a $58 stock. It has created a new 52-week low of 49.49. And as we sit on Halloween Day, the stock closed at 51.53 with an after hours of 51.45, down 8 cents from close.
Yep.
Not horrible.
But
The only real difference in Wall Street, which I've noticed after this earnings, when it comes to price targets for the stock itself, the high estimate hasn't changed. Still $90. The average is 66, but before the average was, I have here 72.50. So the average has come down like $6, but the high estimate on the analyst rating hasn't moved from 90.
Yeah, so essentially it's like a hold. Essentially, overall.
50% hold, 27% buy, and a 15% strong buy, and an 8% underperform.
It is 50% hold. I just did it based off the news. But
yeah, but I don't know. Their PE ratio keeps dropping. So I don't know. What does that tell you?
Well, like I said, or like what was reported, it's gonna go down a little bit. And then I don't know, it might do a little peruse of the market.
Yeah,
but
I mean,
overall,
a stock.
Yeah. I was just gonna say overall, they think they're gonna bounce back around 2025. I'm like, oh, that's a good hold.
Yeah, I mean, it's a long-term hold. It's not something you buy just to make a little bit of profit. It's a company that you hold long-term. But yeah, I don't know. It's interesting to see. They already have a pretty friggin' solid PE ratio. Their PE ratio trailing 12 months is 13.07, and then their FWD. I don't know. Analysts are still expecting pretty solid earnings in the fourth quarter. Is now 6.79. I love CNBC. The information, it literally like updates it to like that, like to this, like you can like sometimes I've literally been on the page and it'll be like, dude, yeah, like it refreshes itself. It's great. But like most companies nowadays, they have absolutely horrible debt to equity. Just like McDonald's in one of our last episodes, they have pretty similar debt to equity, like McDonald's, but they're still bringing in 44.935 billion in revenue with gross margin is 76% and a net margin of 18.48%. So they're still definitely bringing in the money. They're just not bringing in as much money as people would hope.
Yeah. And they're gonna
As a
spend a little
company
bit
is
more
big.
to recover too.
Yeah, they're going to have to burn more cash to continue to grow and get those numbers even better. But it's crazy to me, like how big this company really is. I mean, it's a market cap of what, 104.851 billion as we speak. This company's so big. Like when I was looking at all their labs and offices, they're all over the place. They're Korea, South Korea, Japan, Taiwan, Germany, Switzerland, all over the US, Canada. They're everywhere. It's insane. But I don't know. I mean, yeah, maybe I'm like temporarily kind of bearish on the stock, but overall, medium term and long term, I'm definitely bullish on this company. It's not going anywhere. Um, like I mentioned earlier, it's 150, what, 100 and what, since the 1870s, 80s, 1880s. So you're looking at a 150-year-old company. But
Yeah.
just in the short term, I think things are a little bearish. I mean,
The
I haven't looked at
position, yeah, go ahead.
I haven't really looked much at the chart other than that absolutely horrible drop after
Yeah,
earnings. It was,
I was gonna say that drop is serious. I mean, I'm looking
it,
at the cost of just distribution. You know, it's only off by around $7-ish.
yeah,
So average cost is
but
59.61, closing price 51.53.
mhm.
So I think people are just kind of buy in. I don't see this as
Yeah,
something that people are gonna
I
dump
mean,
at all.
and then the market obviously is just pulling it down like it's pulling down most things right now. But I mean, I don't know. For me personally, it's still a buy. Even Yahoo Finance has it as a 20 has it undervalued at a 25% return. And
What?
Yahoo Finance is super conservative. They have a 1 year target of 71.57 and they are considered 25%
Yeah.
undervalued
Oh yeah, it's definitely in
at a
the buy
25%
area,
return.
especially
Yeah, like I
especially
mean,
right now.
it's not like one of the like I said, it's not a stock that you buy and like, all right, cool, I'm gonna make a quick 20, 30, 40% on this. It's gonna run. No.
Mhm.
This is a long-term buy. This is something you buy, you keep, you hold it. They pay a dividend.
Average in, because it can go a little lower, but it's definitely a good place, a
Yeah,
good buying place. I mean, not
I
financial
see.
advice, but I'm just saying.
Yeah, I mean, I could see like it going down to $45. Like it's already come down $8, but it was pretty much trading in the 57 to $60 range for a while, before it kind of like had a leg down from the 70s, from the second quarter,
I mean, it could go down
um,
to 43. It could go,
43.
yeah, I think it could go to 43.
Exactly. So for me, something like this, a company like this, it's not something that scares me. If anything, that's something that like, oh, if I was interested in the stock, which I personally am,
Hmm.
for me, that's like, woohoo, I'm getting this for $45.
Yeah.
And I'm getting a
Woohoo!
4.42% dividend yield. I'm holding this until I die. If I have kids, they're gonna get it.
Hmm.
But I mean, yeah, I like they're honestly, I don't know. I don't know. Sometimes I see Wall Street and I'm like, you guys are idiots. Like it's just like one big club of fucking whoops beep. I swear, sometimes like they like they're just bearish on something just so like the overall market will dump it or something. I don't know. Maybe they can just get in cheaper. I don't know.
Yeah, I
But
mean, totally. They totally do that.
their earnings, it didn't meet their earnings, but their numbers aren't bad. Their numbers aren't that bad. I mean, yeah, there are things we could improve on. I mean, like their return on asset, it's not as good as the first quarter, but it's still plus 57.86%. The return on equity, still plus 46.83%. Their earnings per share is still plus 49.15%. Their net margins are still up 54%. Their debt to assets, negative, but plus 2.5%. They
Mhm.
never really had a great debt to asset because they're a biopharmaceutical company. They burn cash. just like tech companies and pharmaceutical companies burn cash because they're trying to grow at rapid paces and they're trying to come up with the next best thing
Mm-hmm.
for medicine. Tech companies do the same thing. But I mean, their book value per share, it's up 0.25%. Um, their income, their net income's up still plus 20%. Their total revenue, they had really bad total revenue overall. But like I said, these companies, they're just burning cash because it's like they're trying to, they're always trying to add new medications to the pipeline, add testing, and they're huge. So, I mean, when you buy a pharmaceutical company, you're not buying it for, hey, let me see what this can do in 6 months. Let me see what this can do in a year. You're buying it for, let me see what it's going to do in 5. Let me see what's going to do in 10. Is this company going to cure or significantly help cancer, multiple sclerosis, whatever? You're looking in the long term. This isn't like a, hey, I want to buy Tesla. Let's see a cool $60 pop and buy some all options on it. It's a pharmaceutical company.
Yeah.
Balance sheets pretty much stayed the same, more or
Mhm.
less. I mean, they're down 2 billion on assets, but they still have 91.2 billion in assets. Liabilities are at 62.2 billion from last quarter. It's up 600 million. Their operating cash flow, they had negative five quarters. They finally have a plus 28% in their operating cash flow. Their investing cash flow is plus 80%. Best numbers since they've had since the last quarter
Yeah.
of 2022.
Yeah. Which was
Their
202.
finance, yeah, their finance negative 13%. Not so great, but also not horrible. I mean, when you look at other companies' cash flows, it's like they've had negative 30, 20, 30, 40, 50, 60% for quarters and quarters and quarters and quarters. I don't know how they're surviving, but I guess they have that staying power in their brand. But I don't know. Like I said, short term bearish. Stock could, like you said, go down to $43. But if anything, I look at that as a discount. If you're bullish on something long term, you have to look at it as a discount, not as a
Yeah.
negative.
I think it's gonna hit its lowest probably beginning of next year. And we're not that far off. Sometime in the first quarter of next year, maybe it'll hit around.
Yeah,
I'm going to
that's
make a
actually
forecast. I've never
that's
done this
actually
before, but maybe like first quarter 2024, it might feel a little pain, which is everybody else's gain. So
yeah. I mean, actually, last the beginning of last year, I remember it was pretty much kind of like the same thing. I saw many stocks at their lowest I've ever seen them. Some of them, the beginning of last year, like for example, I remember we started off the year, Tesla was $103. It proceeded to go on a 200 some dollar run. If you're bullish on something long term, it's a discount.
but yeah, Bristol-Myers Squibb.
But yeah, Bristol-Myers Squibb analysts are temporarily bearish, overall bullish, not financial advice.
The
I
company
personally don't
itself
own this.
is a little bearish, but they
Yeah, a
have
little bearish,
bullish
but they're being,
outlooks.
yeah, and they're being transparent with investors. They're being transparent with the public. They're
I
not hiding anything.
appreciate that because a lot of people and companies aren't.
Yeah,
So
yeah, they like to hide stuff. They like to tell you last minute, like, oh, hey. I mean, it's not like you're gonna be surprised. That's why earnings reports come out for. But you know, you you look at that stuff.
yeah.
But I mean, you look at the balance sheets, you look at the cash flows. But at least they're being honest with themselves, and yeah, they need to advertise more. I mean, for these medications, I mean, they're only real. Well, I shouldn't say that because I'm not like super knowledgeable in this field. But I mean, from what I've read and from what I've seen, they're real no competition that's hurting Bristol-Myers Squibb. It's just generic medications
Yeah.
with a little
And I
bit
think we spoke about that in one
more.
of our videos.
Yeah, about our last episode is they're being affected by cheaper options.
Hmm.
But hey, I mean, if you have a good health insurance, I mean, why would you go with a generic option? But hey, that's for another video. I
It's just
mean,
a name brand. Same
true.
ingredient. Usually.
Mm,
Usually.
yeah. Yeah, we can't really speak too much on that because we aren't scientists or
Pharmacists.
doctors or pharmacists, either any of the above. But
True.
I don't
But you can
know,
also look
from
at
an
some
investor's,
ingredients.
yeah, yeah,
From an
I don't
investor
know.
standpoint, personally, long-term bullish, short-term bearish, personally, mid-term bearish. But
Yeah,
personally, not
yeah,
financial advice.
yeah. I mean, hey, if you're willing to buy the stock and you're willing to hold, I'd say you'd be rewarded a good 25, 30 a share while getting paid a dividend.
Yeah, what is their dividend?
It's a 4.42% yield.
Okay.
The beta is pretty low too, so that means it'll probably be a
Not
pop.
showing on mine. It's saying it.
Yeah.
Oh, I'm looking at the
Their
wrong.
year to date change is negative 28.38%. Compared to this time last year, the stock is down 28.38%. It was like $75 this time last year.
Yeah, mine is just saying zero. Oh my goodness. Because
Yeah.
it keeps giving me the wrong thing.
So their next earnings date is a little bit away, but
Oh, $2.28.
is yeah, for sure. Um,
February
and
2nd,
I, yeah,
2024.
yeah,
That's going to be an interesting earnings.
yeah.
That's the earnings you got to look
Um,
out for. I said Q1 2024. That earnings, not horrible, but I think they're going to be feeling some pain. I'd be surprised if they're not.
yeah, yeah. But
Anyway,
yeah, like for example, Wells Fargo, they lowered their price target to 58 from 65. So
there's a lot going on. There's a lot going on within and outside Bristol-Myers.
yeah,
But that's
yeah,
Bristol-Myers Squibb. That's
yep. And they
them.
have a lot of drugs in the pipeline. So who knows? All you need is
One
one
good one.
really, really good one gets approved by the FDA. It's effective.
Yeah, that's true. I was thinking that earlier.
Look at Moderna. Look at Moderna. It was a $39, $10 stock, $30 stock. Boom, COVID, $200.
That's why I'm like, it's gonna be an interesting
One good
earnings report because you never
drug.
know. But
And they
I do think it'll be
have
bearish.
dozens in the pipeline. Yeah, it's a bearish, but hey, like I said, pharmaceutical companies and tech companies. I mean, overall, if you're an investor, you're investing in a company. You're not trading to make a quick profit. If you're
Hmm.
investing in these companies, you're investing for the long term. I mean,
Okay,
I don't
great.
care.
So to wrap this up, any last things? I'm good on Bristol Myers.
No,
I've said
I'm
my
good.
piece.
That's it. Yeah, for me too on my end. I mean, hey, I still think this is an $80 stock, but who the hell am I? I'm
Oh
just a
no.
guy on YouTube.
Wait for 2025. Wait for 2025 when the
Yeah, I
world
mean,
recovers.
accumulate. It's accumulation time, not financial
Accumulation.
advice.
Accumulation time. That's so funny. Anyway, thanks
Yeah.
for tuning in. Thanks for watching. Thanks for being
Thanks for watching.
awesome. Thanks for supporting. Thanks for coming back.
Yep.
Hope we see you next time. Stay
And I
safe.
hope everyone saw the 8 quadrillion shares at AMC stock. Please like,
I
share, and
knew you
subscribe.
wanted to say
The
well,
eight
I'll put a
quadrillion
screenshot
shares.
right here. Screenshot. Boom. And that's
Eight quadrillion. Quadrillion.
I'm like,
Anywho.
what is happening? Anyway, but that's for
Yeah.
another time. That's for another time. We could talk more on that another
Yeah, we got 2 AMC stock videos coming up for anyone who's interested.
time.
We
Thank
have an
you.
AMC, yes, AMC update. Look out for that, and AMC earnings report. I know this is the Bristol Myers Squibb, but hey, This is things to look out for in Chalk Talks Talk.
True.
Thanks for your time. Thanks for liking. Thanks for sharing. And thanks for subscribing. If you do and if you don't, that's okay too. And thanks for clicking.
Peace.
Stay safe, everyone.
Recording in progress.
Welcome to another story of anacondas and spooky things.
Can't stand it. It's too much. It's too much, Johnny.
AI art.
We should hop on that. Hop on the AI art.
We need a serial killer channel. No one has one that I know of. People
There's a
are
bunch
weird
of them.
like that shit.
There's so many of them.
Yeah, let's start this one. Okay. 3, 2.
Go ahead. You can start the intro.
Yep.
Okay.